Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the Dow Jones on a daily chart, and we'll have a look at some other daily charts as well. I just wanted to point out a few possibilities, and I never get fixed to the long side or to the short side. I try to assess what is and at the time, and this is the S&P 500 here, and with the S&P 500 here, it's a little bit different from the Dow Jones in that this particular high point, this particular high here on the S&P 500 was lower than its previous high, where the Dow Jones was actually higher, just a tad higher than its previous high here. So I took the broader market here, and we're looking at this as an A and a B and a C wave here, corrective wave in a move, same as like this one here, I guess, an A and a B and a C here, and then a move to the upside. And that's what we were looking for here. We're looking for new highs above here, but unfortunately it's not occurred. It still could occur. It could still be up for 1 and back for 2 here, and then up for 3 and 4 and 5. That's a possibility. But if it takes out this low here, then that's not the case. Then we've actually got a bigger scenario happening in this space here. So when we look at the Dow Jones with that top there in mind here, we see that the Dow has this as the high there. We find this here. Okay, this is the Dow here. We can see that in this particular case, we can see that this is the high here, and this move up here, for the people that understand Elliott, did appear to look in a an A and a B and a C, like a B wave. So still an A and a B and a C wave here, and looking for an impulse wave up there, and that does count as an impulse wave here. It's just didn't take that high out through there. So this move down here is a concern. So this could actually be counted now from this high here as down for 1 and 2 in this particular scenario through here. So that's what we need to be mindful of. And when we have a look at some of the other markets as well, if we look at, well, the transports have always been important as well. So I'll just go to the transports first. And with the transports here, I know this is a little bit messy here, but what we were doing here is we were considering that the 5,000 here is the line in the sand. So if the Dow Transports does find the 5,000 as a retested resistance here, then we would be looking at the bearish side. Now, we were looking at that in a couple of cases all the way through here. And this was the last little episode here, and we were tending to be a little bit bearish at this point here, but a push back up through there and finding support there just really puts us on the bullish point here. And we do have this little 5-wave structure up through here, so that's why I'm interested to see what actually occurs in the Dow and the S&P 500. But this is giving a positive mark here, so I'm getting a lot of mixed sort of not signals, but different sort of wave structures at this current point in time. When we look at say should have a look at the Nasdaq as well, because the Nasdaq has got a bit of a knack for leading bear markets to the downside. I've known this because I've been through a few, and here we've got this move down through here really needs to be counted as well, we counted it as a corrective wave in terms of an A and a B and a C here, but now we've got this move that's coming through this low here, so it would have to count in a slightly different way. It is 5 waves here, but what happens here is that this structure here overlaps this one here. That's why I figured it was corrective. So if this was going to be a larger bear market, then this would have to be down for 1 degree, back for 2, and then this would have to be the smaller degree 3rd wave unfolding through here. So that's a possibility. The European markets, if we have a look at, just bear with me here for a minute. We'll have a look at the FTSE and the DAX in a minute, but this is the DJ Euro Stock 50, the top 50 stocks here. So on this daily chart here, we do have a real clear 5 waves to the downside through here, and then we have an A and a B and a C wave up through here. This has got a bearish connotation to it here. When we look at the FTSE, however, if we look at the FTSE 100 here, we can see that we can see kind of much the same sort of picture in an odd way, but we were also looking at this. This does count down here in 5 waves. That's possible. So down for one, and an A and a B and a C back up here, because it never took the tops out here. I was just assuming that it would, and yeah. So look, it's still May. However, it's basically got both wave counts sitting there. It could be bearish or it could be bullish. It really needs to take that top out there to be bullish, and that's pretty much the same with the DAX as well, in terms of it's got well, this is why I also figured that it had an ABC correction, because it had a 5-wave structure down through here. As an A wave, a B wave, and a C wave here, and then started giving us 5 waves to the upside. Of course, the European session is only the US session starts at sort of lunchtime European time, so it hasn't got the full impact of what's occurred in the US markets. So until the DAX comes down and takes out this high here, this of wave 1 here, then this is still a bullish picture to the upside here. So there's mixed pictures coming through from the European markets and the US markets, and so we just need to have a little bit of caution with all of that. One of the flip sides of this, of course, is the US dollar, and with the US dollar here, what we were looking for here originally is, and still are, is that looking at this as a wave 4 across here into the 80 here. So this is the price that we're working with, and we were looking at this here as a wave 4, and wave 4s are complicated and sideways, and we were looking at this being well, this counts as an ABC correction up to this point, and then we've had this little structure here, and then we've had this one here. So on the way through all of that, as you know, we label that as an A wave to here, a B wave to here, and a C wave to here, and we started getting an impulse wave to the downside. This impulse wave to the downside only counted as 3 waves down to here. We were looking for the 4th and the 5th wave to come down through here to continue it to the downside. We haven't got that. We've only got this other 3 down here, which makes it a B wave. So what that means in essence is that we do have 3 waves up to here. That top would be there, and this one would be here, and then we have 3 waves to the downside here, as such, into here. So we've actually got an A and a B and a possible C wave here. So this correction has just gotten a little bit larger, so we'll have 5 waves up through to here. So I feel that this will play out through here in 5 waves, and once that's completed, then we would see this as an A and a B and a C, and then we would have the downside. Now, for this to play out here, that means that any further upside here would obviously give downside for the other markets. And the Australian market, as you know and aware, is that as the US markets have been correcting on the way up, the Australian market hasn't really sort of taken that on board and has just done its own thing and continued to move up in its own way, and that's been led by the banks. But when we start looking at the finance sector or the banks, if we look at CBA first, because it is such a leader in most cases. And just looking at its top here, this is its top here. This move down here, this move coming down through here, actually counts as a corrective move. It doesn't count as an impulse move. So because it's a corrective move, it really makes whatever's going to happen next through in this space here corrective as well. Now this move up here can be counted as corrective, or it can be counted as impulse, and it would count like this. This would be up for 1, an A and a B and a C for 2, and then this is the whole third wave up here, and the third wave would count as 1, 2, 3, 4 and 5 to here. So that would be wave 3. So basically wave 1, wave 2 to here, and wave 3 to here, pulling back for wave 4 here, and then wave 5 up through here. So it would just take a little bit of the wave 4 here normally pulls back 38 point. This is the positive side to the wave count, just so you know where you are and you can track it yourself. The third wave normally pulls back 38.2%, so we could see it down at 56 here, or the fourth wave of 1 lesser degree. Once that's completed, then we would see 5 waves up, but would see probably the length of wave, whoops, this wave 1 here actually. So we would only see just a new high here, and then we would get a correction from that point there anyway. It would get a larger correction from here. So that counts as that's the positive count to the upside. The negative count to the upside is that this 1, 2, 3 here that we've just had would be a B wave, and so this would be an A wave and a B wave, and then we'll get a C wave. So this would be a smaller A, smaller B, and then the C wave here, and then the correction. So basically it counts as this top here. It really counts as an A and a B and a C correction as such here. And this move down through here would be the C wave, and that would always be in 5 waves. So we'd be looking at something like that. So what we'd be looking here is a larger ABC correction before we see any further upside from here. So that's the possibility here. So if the US markets are really going to sort of crank down, then our banks are going to, because our banks led the way up, really, didn't they? I know that the other banks, the other markets have been, looking chirpy as well, and that's still on. But yeah, this is sort of what we face here. So with the XJO, so to speak, when we're looking at that here, it's been, powering to the upside, and I feel that this structure to the upside is not complete. We can count certain tops here. However, what we have to work with here is we have to work with the 4,500 here. That's the closest, largest number through here. And for the people that understand the levels, always looking for the first high above the level. It's a little bit like here, if you like. So the market come up to 4,300 here, does its little thing here, and then creates the first high above the level, and then comes back and checks it. And that's kind of what's happening here. It's done its first, it's had its arrival, its reaction, and now it's got its first high above the level. So it is quite possible for this now to come back and have its corrective pattern through here. So that's what we've got to be concerned about. When a market like this does trend, it does the nature of the Australian market has small retracements once it gets going. We can see that in terms of this situation through here, and also more if we go back to the original sorts of bull markets that it has. This is a kind of thing that we're sort of looking at. They're not really big corrections as such. They're manageable, but we get them all the same. So that's kind of what we can expect over yonder here. So So this is what we should be sort of expecting. We should expect another move to come back into the 4,500 here. So let's just see how we go with that, because when we do look at the there's one more thing I wanted to point out. Sorry for mucking around here a little bit, and that's the Commodities Index here. I'm just going to use the UBS, the DJ UBS Commodity Index. A lot of people use the CRB index, which is just as valid as well. This is the commodity index, and this index here, this really accounts for all the commodities, with soft commodities as well. So it's pretty much sort of all of them. So what we can see here is we've seen a move come up to the 150 here, and this up to the medium level. So this move coming up through here also counts as 5 waves as well. These would be the 1s and the 2s in here. This would be the 3rd wave here, and this would be the 5th wave through to here with 5 waves in it: the 1, the 2, the 3, the 4, and then up for the 5. Because commodities tend to excel in the 5th wave just as much as the 3rd wave. In stocks, it's pretty much just the 3rd wave most of the time. But as you can see here, it is correcting through here, so it does have a bearish bias here, and this is what we're seeing in the copper market as well at 380 here. So it does appear that if this support here fails, then we're going to be looking at this support here. So we can certainly end up with, for the commodities here, we could certainly end up with a larger correction here. So this correction for the commodities in general is not complete. Okay, so with all that in mind, we can see that our Australian stocks are ready to, the leading stocks, the banks, the finance sector are ready to correct. The commodity section is in a correction. We've known that with the copper market and the gold as well. We just figured that it may be an ABC and it's completed and it'll be pushing to the upside. But with the US dollar index pushing to the upside, we're going to see new lows come in. And those lows there, so now we need to count another 5 waves down through to here. With the US markets and say the S&P 500 here, this is what's happened on the intraday here. So with the intraday here, we can see that we've had this sharp move down overnight. So of course, our markets will sort of gap a little bit today, and this is the problem too, because if they do gap down, some will, some won't, and we do go short. One of the problems is that we'll be looking at 5 waves to the downside, 3, 4, 5. When we hit these old lows here, that means that we're going to get some type of rally to come back into this area here first, and then once that's done and dusted there, if this makes a new low here, and this would be more so on the cash market, the low here on the cash market is 1425, but here it's a bit lower through here. But if it does make a low, below this on the cash market, and then we know that we'll have 5 waves down here, then we know that we're going to get a retest here, and we don't know how high that retest is going to go. It might be really shallow, it might only be to here, or it may be 61.8% way up here and then to the downside here. So because we get 5 here, it means that we'll get another 5 over here, and this is the same with the currencies as well and most other markets. So we've got the problem of we've got some long trades in the market, so we need to really sort of execute those. Now we could probably get a better fill if we waited for the bounce back up here, but it's better to control it at the point of time, which is today really. And also when we do take on some short positions, the short positions may go through a 2-day bounce here as well before they move to the downside. So we could get whipsawed through this section a little bit here. So you need to give that consideration in terms of your position sizing. And so, if clearing out these longs here, clearing out the longs first would be step 1, waiting for a setup to go short. Maybe a switch pattern will occur in most cases. So that would be nice. But if you're just going to go from long to short, then the short positions you put on could be a little bit smaller, just in case they get stopped out over the next day or two. And because the Australian market hasn't been reacting to the American market in the pullbacks that it's been having, but at the same time, I've just pointed out that the banks are at a possible point where they can turn down lower, and the commodities would do the same thing as well, because the US dollar index is pushing to the upside. So you need to give consideration to the turn, but certainly being proactive and acting in the now rather than for the longs, rather than waiting for days ahead. A small loss is a good loss, and getting a few on the short side is the go. I tried to do that on the Friday because I was kind of aware of things, but only one of them got triggered. But at least we've been tightening up our stops on our long trade. So this is the S&P 500. This is what's happening here. The Dow Jones is exactly the same. The European markets are the same as well. Their move down through here hasn't developed in an impulse wave just yet, but if this moves down into these lows, especially into this low area through here, then we've got overlapping wave structures, and we would be counting 5 waves down, and we would have to be looking at as a B wave there. So I didn't get to look. We did look at the European market. So if we just have a quick look back again there, say for the DAX, so to speak, here. This move coming up through here, if it over this move up through here, if the market comes down past that there, that high there, then we're going to have a bearish picture on our hands, and we'd be looking at a 5-wave structure like this. So we'd be looking at an A wave, a B wave to here, and a C wave to here. So that's what we'd be looking at there. Yes, there is good support on the 7200 here, so we may not even get a new low through here, but we just need to be mindful of what's occurring here, that's all. And the Australian market as well, it's quite strong to the upside. In fact, this picture here from the top of the third wave here, across the 4500 here, because it's normally the top of the third wave that hits at a level, and the fourth wave is the reaction, and the fifth wave is normally the upside. But this doesn't count. This move up here doesn't count completed for me at this stage. So yeah, it's still up for 1 here and back for 2, and then up for 1 and back for 2, and then up for the third wave here. So we're just looking at a little fourth wave here. But if this move comes down and starts overlapping the 4500 here, then that's going to cancel that move, and then this is just a really unfinished move through here. And that's kind of what we've been getting actually in these moves that have been coming up through all the way up through here. We've been getting unfinished. It's like this move here. It was just sort of it can count as 5 waves, but it's just really unfinished. And this, if you remember, this move coming up through here as well, it was more like an A and a B and a C wave up here. It's like 3 waves here, you know. So it's like very unfinished wave structures, very sort of unusual structures. So this is also like in 3 waves here. So we just need to be a bit careful. But I can say that this is the arrival, the reaction, the first high above the level, and then we could be looking at a correction. The correction that we could be getting through here, if we do get down to 45 and get overlapping wave structures here, is that the distance that went above here would be the distance that we end up being below here. So if that was the case, then we'd be looking at 5 waves down in terms of 1, 2, third wave down to here, fourth wave here, and fifth wave here. Now, if we do get 5 waves here, that means we'll get 3 waves back up and then another 5 to the downside. Okay, in a larger ABC correction. So a bit like this here, 5 waves down here, 3 back up, and 5 down. So at the moment, we're still just in the first 1, 2, 3, 4, and 5, and then A, B, and C coming back up here, finding that as resistance, and then another 5 down as well. So we just need to see more of this here, and we also need to see if the Australian market does follow the US markets to the downside. Okay, let's have a look at commodities. Okay, starting with copper here, is that we were considering this whole move up through here, positive move, moving up through here. At the same time, we've been a bit of aware that this move up here, this wave 1 here can be an A wave, a B wave, and a C wave up here, which is also not complete as well. But what we were doing is we knew that we would come up to this area through here, the 72 and the 80 here, and there would be, you know, profit taking and some type of corrective pattern. And we looked at this and we feel that it is a corrective pattern because the A wave had a correction in it. So we're considering the whole thing a correction, and it certainly could still be a correction as well. But the little path that we were following here in terms of an A and a B and 5 waves down for the C wave here is invalidated now because this move has come down through here. And what we're also considering as well is that a move back up above the 72 there was a trigger for longs. Now, if we just drill back in here, this move coming back up through here, we talked about this too, and we talked about we're not really getting an impulse wave coming after getting through this corrective pattern. This here, this A, this B, and this C wave down here. It wasn't like we were getting a nice, a strong impulse wave here. I mean, that's an impulse wave, you know, so we weren't getting that. We're getting this overlapping structure, so it looked corrective, but we went with the long because it pushed up and it was coming back and looking for support on the 72. And as long as it maintains, like any market, it sits on top of the 72, I would go long. But as soon as it broken the 72, well, then would be out and will be on the short. My policy is that always be on the right side of the number 72, and so it was developing, but it wasn't. The retest was still confirming, but it didn't. It failed. It didn't support and move off from there. So what we're looking at here is we're looking at an impulse wave to the downside. So this impulse wave to the downside would be the 1, the 2, and this would be the third wave unfolding. So we're going to see a fourth and a fifth. Yes, it is. For the people that understand Elliott, it is possible that this fourth wave here can be pulled over to this point here, and this fifth wave down to here. So this would be an A and a B and some sort of C wave here for wave 4 here, and down for wave 5. It's a possibility, and it's okay, but this will depend on what the S&P 500 does in its structure to the downside. So if the S&P 500 makes those new lows, then down past 1425 on the cash, then we're going to be having a larger correction as such. And this would also reflect back into other markets. We can see that gold is obviously, well, first of all, this is the high point here for gold. We were counting this as an A wave down through to here and a B wave up through to here, because it wasn't, as a fifth wave, it wasn't, yes, it did make a new high, but it wasn't a real sort of, it wasn't a nice impulse wave here. It was more of a corrective. So it's really like a more corrective structure. So a B wave, an A and a B and a C wave through to here. There's a couple of different ways to count this structure to the downside here, but either way you look at it, it's still got further to come down through here. So in this structure here, that's the beginning, that's the middle of it through here. So it's still got its end to here. So it will, you know, be the 20, the 1720 and the 1710 will give it some support here as it comes into the 1700 here. But it does have more downside to come, and that's why I think copper would be on the same side, just as the US dollar index has got more to the upside as well. The oil market it never found support on 93 like we were sort of hoping for it to do. So for the people that understand Group 1, if it develops support on Group 1, well, then we can be long to the upside. We can glean positions before that, but they're always at risk. In this case here, with the US dollar index pushing up, we can see, and oil following stock to the downside, and also trade in US dollars as well. So, but even at this stage here, we can't really go short on this either until this actually becomes until the 90 here, the medium level, becomes a retested resistance and failing at that point, because yeah, I mean, it can come down through there, and you could probably trade it down, but you know, it's that retest coming back up. We want that to fail, the same as that we may have gone short here, but we would have been out here if we didn't, but that was the case. This one here, the retest here, if that had failed here, we'd need that first sort of low there to come into place, so we'd short this one here, or if we had a second one, then we'd short that one there. So we need it to come through here, go back up and fail, and then move down, and then you would short it through there. So it's not set up as well just yet. And also this move down through here, if it's got 5 waves down here, then it's likely to retest back up into supply areas here before it moves down as well. So just be a little bit careful here. You really need that 90 as your, a price, the price that you can work from, and it's not set up to go short just yet, even though that it could head to the downside and follow stock to the downside. All right, let's have a look at currencies. Okay, looking at the US dollar again, and just in a little bit more detail. So we were looking for wave 4 to be completed here, and would be looking at this as an A wave, a B wave, and a C wave. And then we're looking for 5 waves to complete down through here. And we've only really got 3 waves here. We could sort of call it 5 waves if we counted that 1, 2 here, 3, 4, and 5 here, but that gives us overlapping wave structures through here, so I just sort of didn't want to go with that. So yeah, this wave 4 that we had here moving up through here, it also has to be cancelled now because it's moved into the price territory of wave 1 here. So it's moved through that, and it's still got more. I can see when we look at this structure here, it's still got more to go up through here. So when we look at, so anyway, that can't be wave 4 now. So we need to be looking at this as a 5 wave move up through here, and then that wave 4 would eventually be over here, and this would be the A wave to here, the B wave to here, and the C wave to here. So in looking at that little move up through here, and we started to look at this the other day as well in terms of a corrective move to the upside, in terms of an A with 5 little waves here, and a B wave, and then we're looking for a C wave up in 5 waves, and we're looking for the 1, the 2, the 3. That 3 may even be to here, but it's not that important, 4, and then 5 up here, and this is still moving to the upside here. So I can see that this is in this 4th wave to this 5th wave here. This is the little 3rd wave in the middle here because it's the strongest, and this is a typical wave 4 here going sideways, so there's still a little 5th wave here. But what I'm sort of thinking now is that this is not a corrective wave to the upside, so this little it's an impulse wave to the upside, a wave C to the upside. So this little A here would have to be wave 1, and this would be wave 2 here. So this would be all just the 3rd wave up, and then there'll be the 4th, and then there'll be the 5th. So we'll still be going higher. So while this is going higher through here, then of course the indices would be pushing to the downside, as would the currencies. So in looking at the euro here, doing the mirror opposite, we would have to look at a larger correction across the 130 in terms of something like an A wave to here. This would have to be the B wave now to here, and then a C wave down into this area through here. Not that it may come very far at all, but it would be more like a flat correction through here. There's plenty of support in through here, but all the same, a larger correction across the 130 here. So that's what we need to drill in there and have a look at that. It's also too, it's that B wave I just had going to the upside there. It may not be done and dusted yet as well, because this structure to the upside is not completed as well here, in terms that we've got a nice little 5 waves up here for wave 1, back for wave 2. Then we've got a nice little 3rd wave up here, and this being the 4th wave here. But once again, the 4th wave can't really cross it. It would break one of the 3 Elliott rules, that wave 4 can't move into the price territory of wave 1. But I know that in currencies or leverage products that it does that, so we can give it a bit of credence, I guess. But yeah, all the same is that coming back into the 130 is we're going to see some sort of corrective move within here. So and this is also developing into an impulse wave to the downside. So a 5-wave structure down here, which is highly likely, would see a 3-wave counter trend here, and then another 5 waves down. So just be aware of that. What you'd be looking for to trade this would be a move down through to here in line with the S&P 500. Once it finishes here, then there'll be some type of bounce. So I wouldn't really get involved in the bounce too much, but looking for the next leg down for that would be the go on that side there. And the Australian dollar, just on the 20-minute intraday chart here from the 104 area through here, it also needs to complete further to the downside before we can call it an impulse wave or a corrective wave, in terms of this can be called an A wave or wave 1 here, a B wave or wave 2 here, but this third wave that's unfolding here is still unfolding. So we would have wave 1 here, wave 2, and then we would have from wave 2 all the way down to wave 3 here. There will be 5 waves in that, and the way I can see them so far is down for 1, back for 2, 5 waves in this little guy here for wave 3, then there'll be wave 4 here, then wave 5 down through to here to make wave 3. So we expect a bounce off the 103 in line with the S&P 500, then a wave 4 pulling back to the wave 4 of 1 lesser degree, which is this guy here, basically not finding support on the 103.30. So that would be the top of group 1 there. So failing to find support there would see that 5th wave come down through to here. From that point there, we'd need to see what the other markets are doing from that point, because this 5th wave here can be the bottom of a wave C. If we take the A, the B and the C wave down to here's a corrective wave down, or you'll have to consider it being wave 1, wave 2, and a larger wave 3 here with a larger wave 4 and then a larger wave 5 here. And if we get that, that means we've got 5 waves coming down from the 104 then, and then would get 3 up and then another large 5 down, which would take us back down into the 102 and 101 area. So that we just need to, we know where we are in the smaller view here. We just need to get past 1 degree of structure here to find out what the next degree is going to present itself to, and would also want to bring in all the other markets into this picture as well. So looking at what the US dollar index does as well, and also if the S&P 500 actually breaks down through the 1425 as well. So we just really need to allow these markets to come down and complete somewhat, and I want to see what sort of new lows that they make. So in terms of the robo methods today, I will be putting some short trades out, but it's probably more important to pretty much scale out of the long positions. Yes, there will be a bounce. The Australian markets haven't been following the US markets in the pullbacks that much, but a 1.5% move in the US markets is is a fair whack. But a lot of that's going to be accommodated really on the opening, so there's going to be slippage there as well. So you could get trapped both ways. So just sort of bear that in mind, and less is more in terms of position sizing. All right, well, that's it. So we're just going through a little state of confusion, I guess, and we just got to settle in and let the market settle, and then we'll pick up the thread again. All righty, well, good morning and good luck.